good morning, everyone. Welcome to MHA's initial reactions to the Chancellor's statement. We heard what the Chancellor had to say. We thought we would just have a bit of a discussion over how we saw that working, whether it had done what he planned. My name's Patrick King, tax partner at MHA, and I'm joined today by David Hackett and Michael Court from our Northwest region. So, David, what were your initial thoughts as to what the Chancellor had to say and whether he's achieved what he was setting out to do?
Yeah, it's interesting, Patrick, because in the run-up to it, it was billed as something. I think Jeremy Hunt used the phrase there would be tax cuts and tax rises and spending cuts of eye-watering proportions. And actually, when he stood up and gave his speech from a tax perspective, it wasn't too bad. Obviously, we had a change to the threshold at which people start paying the top rate of tax. But I don't think anybody would significantly argue with that measure. And there was a little bit of tinkering with capital gains tax. And then primarily it was about freezing thresholds. And naturally that's going to drag more people into taxation and then more people into higher rates of taxation, which is where they'll raise their money from. But overall, I don't think there was anything too controversial in it, and it certainly didn't seem sort of eye-watering from a tax perspective.
Sorry, carry on.
I think what has been said post-statement is that a lot of the big decisions have been left for the future and potentially a future government.
Yes, I have to say I agree with all of that. That's pretty much what I thought, and I think most of the pain that is coming is coming in a few years' time rather than immediately, which is already being mentioned in the press. So not as bad as it could have been in terms of tax raising, although there is pain to come. What about the growth side of things, though? Didn't seem to be that much there. Michael, what do you reckon?
No, not much really. I think the main is an interesting language I thought the Chancellor used around R&D. And research and development, where they've seemed to set that it's becoming more away from more for the SME market and maybe and affecting the RDEC, which historically would affect the larger companies, and that to me was a bit of a surprise in that it seems to historically R&D has always seemed to be for more the SME and a market more generous for them. So it looks like it's skewing away from that over the next number of years. And if you look at the numbers behind that, it does potentially raise a lot of revenue for the government. They're looking at over £1 billion by 2026 for these changes. So that's interesting that they're trying to rebalance, I think the word that the Chancellor used, but it's rebalancing it and saving them money.
Yes, it gave me memories of every time the government say they want to simplify something, what they mean really is they're going to increase tax or reduce allowances. It now seems that rebalancing needs to be added to that jargon. Rebalancing means an increase in tax. I mean, it's quite a large increase effectively in tax, or a reduction in the support for innovation by this measure. That's £1 billion a year fairly rapidly. So perhaps not ideally in the line of growth. But okay, so we've discussed that it's not quite as bad as it could have been in some ways, but on the growth side, perhaps not that brilliant, maybe even pulling back a little. Are there any things that we think people out there ought to think about doing as a result of this budget in the short term or the longer term? I don't know, David, what did you have any thoughts?
Yeah, on the capital taxes side, Patrick, I think one of the changes or the change into capital gains tax was reducing annual exemptions. So every year, everybody can make a gain currently of £12,300, and that's tax free. What's happening in future years is it initially starts to reduce to 6,000 and then goes to 3,000. That's going to drag a lot of smaller investors into capital gains tax. It's going to create an administrative burden, I would imagine, for people reporting small gains. So it'll be interesting to see how they propose to deal with that. In terms of planning, the obvious thing to do there would be, if you can, get some gains in now when you've got a much bigger annual exemption. one of the good things that came out of this statement or wasn't said was any changes to capital gains tax rates, and in particular, no changes to business asset disposal relief, which is the 10% tax rate on the sale of a business. So I think owner managers there can breathe a sigh of relief that there hasn't been any immediate change. If you're contemplating a transaction, you're looking to sell your business, then there's no immediate rush. We're certainly not having to try and fit that in before the end of this tax year. But what I would say in sort of the medium term, that we could potentially have a different government with a different attitude to that type of thing. And if a transaction is on the horizon, then you probably wanted to look at doing that within the next sort of 12 to 18 months, something like that.
Yeah, no, I think that makes a lot of sense. I think unless the economy picks up dramatically in the next 2 or 3 years, it's likely that whether it's this government or a different government, that they're going to have to look again at raising money, and you'd have to think that would be one of the areas they'd look at. So another area I thought perhaps there was something people ought to think about doing sooner rather than later was in the R&D side, and we mentioned earlier, Michael, that there's been a fairly dramatic reduction in the relief. What might people think about doing there, do you think?
So I think for the SME market, the SME companies, I think they'll be looking at accelerating any expenditure to make sure that they get on the higher rates of the relief, so it's more beneficial for them. Whereas for the larger companies who will be in the RDEC scheme, maybe looking at delaying any major expenditure and having a review to see whether it's more worthwhile for them to wait till the changes come into play. So it might be better off for them, especially with the increase in CT, in corporation tax in April as well. So probably for small companies, try to look at acceleration. For the larger companies who are in RDEC, not the SME scheme, to look at maybe delaying it and having a plan for the next number of years to make those in any major investments in any R&D projects.
Yeah, no, that makes perfect sense. And I suppose some companies may want to look at their remuneration strategies to take advantage of the £150,000 threshold for the 40% rate at the moment, or going to the 45% rate sooner rather than later. So looking at extraction policy in the next few months might be worth thinking about. But really, there's limited amount of things people can do. So I think overall we've covered very briefly that the budget was perhaps not as bad as it perhaps portrayed as likely to be in terms of tax rises, although there are quite a lot coming down the track. We've covered off that on the growth side of the equation, it's perhaps not as good as it could have been, and there is a bit of a pulling back in terms of support, which is not ideal, although I know it's money being spent on education and money being spent on capital projects and so on, so it's not all doom. But in terms of immediate tax policy, it seems there's been a pulling back. Perhaps overall, you could say is it does amount to a steady as she goes or steady the ship type budget, and maybe Mr. Hunt has managed to pull that off, but time will tell. I think that brings us to the end of our initial reactions here at MHA. So thank you very much for listening. If you do want more detail, please look at the MHA Hub. But thank you very much.